Hi, I'm Matt Atwood, one of the certified financial planning professionals here at TimeWise Financial. A question that we have been hearing from many of our clients is, should I invest in Bitcoin? So we wanted to take a deep dive and discuss what exactly Bitcoin is and some things to consider before jumping in the deep end. With that being said, let's jump right in. As with any investment, it is important to stay open-minded. Learn the facts and educate yourself. Don't just follow the herd and get sucked into the hype. As an investor, you must decide if you believe Bitcoin is a repeat of Beanie Babies in the 90s or a disruptive innovation like the internet or television. Most importantly, as with any investment, you need to understand the risk. We've all heard the old adage, don't go to Vegas with money you can't afford to lose. Well, the same could be said with a volatile investment like Bitcoin. Therefore, it is important to understand and be willing to accept the relatively high level of risk that comes with investing in Bitcoin. For example, in December of 2017, one Bitcoin was worth around $19,000. But then prices dropped precipitously to a low of just over $3,000 per coin in December of the following year. Bitcoin then went on to hit new highs in November of 2021, selling for as much as $64,000. But now, as of February 14th, one Bitcoin is worth around $43,000. Now, this is a roller coaster ride many investors cannot stomach, and is driven by factors that are often way out of investors' control. For example, in September of 2021, China, the world's former largest miner of cryptocurrency, banned the use of crypto along with 8 other countries. This volatility is exactly why we, with the help of our broker-dealer Avantax, are watching as the SEC continues to caution investors in the cryptocurrency space. So, let's look at the facts. It's not all just about Bitcoin. Bitcoin is a form of a cryptocurrency, and there are 8,000 plus other cryptocurrencies that could arguably solve similar problems. But just like Pets.com, Intel, and Amazon during the dot-com bubble of 2000, you nor I know which is going to be the winner, if any. And it's important to understand what you are buying and what problem it solves. Cryptocurrency is much larger than Bitcoin, though, and therefore it's important to understand the underlying blockchain technology that it uses. So, let's break down the components of cryptocurrency. Let's start off with what is cryptocurrency? Well, cryptocurrency is a decentralized online currency. Well, what does that mean? Crypto does not have middlemen, aka banks or governments, or sponsored controllers, such as the Federal Reserve. Some things that make that attractive are, well, one, there's a fixed number of Bitcoins, 21 million, and they'll all be minted, also known as mined, up until approximately the year 2140. After this time, the printing press will come to a halt. Additionally, Bitcoin can be traded internationally with limited fees or middlemen. Traditionally, if you wanted to send money to a friend in France, you would need to send an international transfer where the bank would convert those dollars you send to euros and deposit them into your friend's account, all the while charging you large fees. Bitcoin, though, on the other hand, could seamlessly facilitate this transfer without the need for a bank. Additionally, though, crypto uses the blockchain technology. Blockchain can get complicated quickly, so let me break it down for you. Back in the days before computers, bankers, and accountants, business owners would keep a ledger. This was a book that would have all the daily transactions in and out of that business. Each day, week, or month, prudent business owners could look at their starting balance, analyze the ledger of those transactions, and quote-unquote balance the books. This would ensure that all their money added up. As transactions became more electronic via debit and credit cards, the banks were the sole ledger keepers and they had the power. Without the banks, it would be hard to operate a business in today's environment. One example of this is recently in the marijuana industry. Many states have legalized marijuana, but since the green stuff is not legal at the federal level, many banks did not allow associated businesses to open accounts. This meant that they could not only accept any electronic transactions, they could only accept payments via cash. And that created a real problem because they could not safely store that money anywhere other than their mattress or perhaps at home in a safe. At a small scale, you can see this is not a huge issue. But once your business grows, and let's say you have a few $1 million, trying to protect your mass piles of hard-earned dollars could become a real issue. If crypto were to take off and become readily accepted, no one would even need the banks to keep their ledger, as it would all be stored online in the cloud. Cloud architecture as a whole is a whole nother video. But this online ledger is stored by users and could in theory eliminate the need for banks, at least in terms of transaction processing. Now all of this sounds great, right? And you may be thinking, why don't I buy as much of this wonderful disruptive innovation as I can? Well, it's because there's some potential drawbacks to consider as well. And these include, as we've already mentioned, volatility. So, as we mentioned before, Bitcoin price is extremely unstable and swings wildly from day to day. This major swing is why Tesla, the second largest corporate holder of Bitcoin, had to step back their initial plans to accept crypto for their Tesla cars. It's important to note that Tesla, who owns $7.4 billion in Bitcoin, bought $1.5 billion worth of Bitcoin just before the announcement came out that they would start accepting it for their cars. This news obviously had a very positive impact on the price of Bitcoin. But just 2 months later, Musk rescinded his comments and stepped back and stopped accepting Bitcoin. One could argue, though, it is hard to run a cars business when you're selling cars for $100,000 today, $50,000 tomorrow, and then $75,000 the next, due to Bitcoin's wild swings. This lack of stability is a concern in comparison to the much more predictable dollar. This means that at the moment, there's not a whole lot other than some dark web drugs or a digital Tom Brady NFT that you can actually buy with your Bitcoin. So for someone in a country like Venezuela, where annual inflation is 684%, these swings might not faze them in the eyes of that crippling inflation. But even at the current rates here in the US, the dollar is a much more stable currency in the short run. Now, an additional con of crypto is limited oversight. There are many scammers in this space. These scammers will tout false returns and rob investors of their hard-earned dollars. One example we want to dive into today is Mt. Gox, a Bitcoin exchange that was at one time responsible for over 70% of all Bitcoin transactions. So let's look at the history of what happened to Mt. Gox. So, on February 4th, 2014, CoinDesk, a company you might have heard of, held a poll to find out how many Mt. Gox users were experiencing withdrawal issues. And at the time, many users on this online Bitcoin exchange were having trouble taking their money out from the website. And many users responded to this survey indicating they hadn't received their funds in even weeks after they requested their withdrawals. Additionally, Mt. Gox on February 7th of 2014 canceled all Bitcoin trading, froze all accounts, and took a step back to take stock of what was really going on. 10 days later, the exchange published a statement claiming it had rectified the situation and all was a go, and that there was no reason for concern as they were able to course correct any of the issues, any customer losses, and resume trading. But at the end of the month, an infamous man now, Mark Karpelès, had stepped down from his role at the Bitcoin Foundation, and the firm's fate was sealed. It then came out and disclosed that over 740,000 users of Bitcoin, approximately $2.9 billion in today's valuation, had been stolen in a hack that it claimed had been ongoing for years. At the time, that amount was valued at around $500 million. At the end of February of 2014, the exchange accepted its fate and filed for bankruptcy in Tokyo. It would also file for bankruptcy in the United States later in March. This story is just one example of the pitfalls of limited to no government oversight. There is no FDIC. There is no agency to step in when there's bad actors. And all of the victims of that Mt. Gox incident oftentimes found themselves with nowhere to turn. So the point of this video is not to highlight the cons of Bitcoin or say that it's bad. The point of this video is to highlight a few of the reasons cryptocurrencies like Bitcoin could disrupt how business is done. But we also want to point out some of the areas of concern to keep in mind. The world of crypto is very complex, and this video only scratches the surface of the technology and its pros and cons. It is important to be aware of the risk of any investment. We encourage you to remember that blockchain technology on an international scale is still relatively new. Nonetheless, though, we thank you for tuning into this video and hope you will like, share, and subscribe to our YouTube channel for more videos like this one.